as of right now, you are witnessing another small drop in the utilization from 100% down to 91, down to 90.96%. But again, a lot of this data is quote unquote self-reported or reported by a third party, which deems all of the data that we receive inaccurate and invalid. With that being said, just like the exit strategy I posted for you guys to go see, if you guys did not see that, make sure to go watch that because it is how you can get out of AMC with max profit. We talked about how when you can and when you can't pay attention to the short interest drop and basically saying, oh, did the shorts cover? We also do know that back in January for the run up in AMC and GameStop, the short interest was over 100% underreported. What is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel if you're new. Today we have a lot of stuff to go over with AMC and GameStop, so make sure to stay till the end of the video so you don't have to watch another update video here on YouTube. I feel like blessing a few people in the comments, so drop your Cash App in the comments down below. Make sure to hit the like button on the video. Also, make sure you're subscribed and have post notifications on. Join us on this journey to financial freedom. Without further ado, let's get into it. AMC currently at 23.98% short interest reported, utilization at 90%, and the cost to borrow had a massive jump to an average of 578% and a max of 856%. So utilization is dropping, but the cost to borrow is still rising. So the utilization drop just shows that they want us to think utilization dropped. Yesterday we talked about how the on-balance volume hasn't changed, and we basically went over every single thing that it could possibly be with a drop in utilization. Now, speaking of that, hedge fund gross leverage is at a historic extreme, close to 260%, which means hedge funds are very, very over leveraged at this point, and it's at a very, very dangerous level for them to be at, which means retail is at the best possible peak you could be at, especially if you're trading in a cash account, which means you are probably not over leveraged. Not only that, but a lot of this could be over leveraged in AMC short positions or GameStop short positions or other plays in general, especially with how the market is ripping. Now, this is the third or fourth day AMC is now on the threshold securities list, along with ticker symbol AI. That is also on the threshold securities list. And today Powell spoke and he also talked about AI. We're going to talk a little bit about it more towards the end of this video. But moving on, test results for AMC theaters. It's actually showing that AMC has a search suggestion ban. This type of ban causes an account to not populate search suggestions and people search results when it's searched for while being logged out. Twitter seems to take high strength of a similar metric into account. While an account may be suggested to users you are strongly tied to, it may not be shown to others. Basically, what's happening here, they're keeping AMC in its little bubble and they're basically creating the search ban around AMC. So if you do tweet AMC or talk about AMC theaters in general, you basically have this little cube of people that are going to be able to see it and a major audience that are unlikely able to see it. Now, this is where we have been tracking with AMC, that we are sitting back here on this chart before the run up back in January because it's tracking very, very similar, and we would be down here at this accumulation phase at the relative lows. Notice back here it also hit this low and then it broke a little bit lower down here. So assuming this would be $3.80, we could drop to around $3.20 before essentially getting that rip. That is just a possibility. I'm not saying that is going to happen, but also notice the gaps, okay? AMC gapped down right here. It made a little gap. It also gapped up right here, created a little gap, and that gap is still visible right here. It created another gap to the downside and almost gapped up once again at this same level. So if I bring the drawings in right here, these are the levels that you see the gaps gapping over. On top of that, a little bit above that, there is another one as well as another one. So when it comes time for AMC to make its move, you see this happen. You see these little gaps happen, and that's exactly what you're seeing right now. So I wanted to talk about it real quick before we move on with the video, okay? AMC gapped right back here, okay? Gapped up, and now we gapped down, and we are sitting at this same spot. We're sitting at this same level where AMC has this little gap issue happen. After this accumulation phase, AMC could drop down to at least $3.80, but in this accumulation phase, during this accumulation phase, expect a gap back over when we start to actually rip. I expect a gap right back over this level at $4.50, gapping right over $4.30 to right over $4.50. So just keep that in mind. I think it's going to happen very, very soon. Plus, we have the lawsuit, conversion, reverse split, settlement, whatever happening over the next couple of days. Now, I may just be adding calls on this after the video just for fun, but Meta Materials hires Wes Christian to investigate naked shorting. Share Intel Analysis has seemingly identified trade imbalances in the trading of MMAT, and we know, right, that MMAT, we are on your side. We know these small stocks that are clearly pressed into the floor, clearly pressed through algorithms and cycles are naked shorted into the ground. It's night and day, right? It's right in front of us, and the SEC knows too. They just choose to not do anything about it. Meta Materials is one of the first companies to have a proven analysis of trading imbalances in their stock from share intel. However, I could go into depth on this, but if you want to know more, pop in the Discord. I will be talking about it in Discord a little bit after this video goes up. As for GameStop, we're trading at $24.13. It recently had this little gap area the same way AMC had it, and it gapped up back here as well. So these gaps are starting to happen, which is exactly the same cycle it would have been at right before that January run up. GameStop, in my opinion, is coming up. It may gap back over $24.35 to right over $25. If that doesn't happen, perfectly fine, but I do think AMC and GameStop, of course, are going to scale up together. One thing to note on this uptrend over the past 2 days, there is not much volume, at least so far, right? The day prior to that, where GameStop sold off at this level, there was a little bit more volume, so I think GameStop may or may not get rejected here and make an even lower low, potentially coming down to $22.32 or even down to this trend line at $20.60. So just keep that in the back of your head as well. Now guys, you have about a day and a half left to do this. Use my link in the top of the description or in the comments down below to download MooMoo and make a deposit. If you deposit $100, you're getting $100 back, so you can basically withdraw $200 plus you're getting 5 free stocks, each valued up to $2,000 per stock, and a guaranteed free C3 AI stock, which is a hot sector right now. We're going to talk about what Powell said about it, and it's also on the threshold securities list. Make sure to go do that, guys. There's absolutely no reason to wait, no reason to sit. If you've been losing trades or if you need extra capital, need extra cash, do that right now. It takes 2 minutes out of your day, legitimately 2 minutes. Moving on, pop in the Discord so you get my trades as soon as I take them. Plus we have options trading alerts in there, and we talk stocks all day long, so any possible questions you could possibly have about a stock, I'm sure somebody will respond in Discord. Those links are right under the video and pinned in the top comments for you guys. Dave Lauer tweeted this today. I don't know how I missed this, but apparently for years before the events of January 2021, firms were disregarding or having excess capital charges waived. It's no wonder we ended up with undercapitalized brokers who couldn't meet their obligations. Huge risk and moral hazard here. Basically, Dave Lauer didn't really find this after all of the digging he's already done, but before the events that happened with AMC and GameStop in January 2021, even before that, firms were just disregarding having excess capital charges waived, leading to brokers who could not meet their obligations and were undercapitalized and still currently to this day have huge risk and moral hazard, which of course brings us back to what we stated in the beginning of this video, how over leveraged hedge funds are, but also the brokers. Now Powell spoke today. He said we don't see America getting back to the 2% inflation in 2023 or 2024. He also said Fed's a long way from confident that inflation is on its way to 2%, however, but the Fed will be restrictive as long as it needs to be. You got to understand that. Plus, he repeats that most FOMC members expect 2 more hikes this year and that they won't take hiking at consecutive meetings off the table. In other words, he can hike and then another meeting coming, he can hike again if he wants to. Just keep that in the back of your mind. That is not off the table. They're not hiking, pausing, hiking, pausing. That's not going to 100% guaranteed happen. He also says U.S. labor market is really pulling the economy and that the Federal Reserve spends a lot of time on AI. The Federal Reserve is trying to get smart about using artificial intelligence, which could be a leverage, a leg up if you got into these stocks early. Not financial advice. I'm not a financial advisor. But on top of that, Powell states there is a significant probability we get a recession. The S&P 500 is green on all of this news, trading at 436.58, up 0.1% on the day. It has a gap to be filled to the upside and the downside at 439.07. I think it's potential that the SPY fills this gap and then starts to fall even further, faking out to the upside. And the reason for that is because there is not a ton of volume on this push higher. Okay, the volume's basically set at price and demand level, evening out right around 435, 435.50. Okay, so the fact that the SPY is breaking higher, I expect that gap to be filled right around 439, and then the SPY to sell off even further, and there is that gap down to 423.23 or 423 even. Okay, so keep that in the back of your head as well. Overall, guys, that is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Make sure to hit the like button so YouTube pushes my videos out to more apes like you guys. Also hit that subscribe button. Join us on this journey to financial freedom. We are almost at 15,000 subscribers. We need about 800 and somewhat more people. This is all organic, and you guys leave the best comments. That makes my day, and I try to respond to as many as I can. So thank you guys so much. I love you all. Lottery Stocks out.